Welcome to the topic of personal loans. This looks at how personal loans work and explains some of the potential benefits and drawbacks. A personal loan is a financial contract where one party, called the lender, agrees to give another party, the borrower, an amount of money. Most lenders are banks, building societies, credit unions, or other organisations. Personal loans are also known as unsecured loans because they aren't secured against your home or another asset. Personal loans are available to most people if they are in employment and have a reasonable credit rating. Lenders charge you interest for borrowing the money. You should shop around and compare the interest rates that different lenders offer. Remember, comparing the annual percentage rate, or APR, of each loan is the easiest way to find the cheapest loan. The amount of the loan and the interest rate that applies is agreed at the start of the loan. Most personal loans are due to be repaid over a fixed period of time. For example, 3 or 5 years. The longer this period, the more interest you will pay. This fixed period will be agreed at the start of the loan. You will normally make loan payments on a monthly basis. These will cover the payment of the loan as well as the interest. Most personal loans have a fixed rate of interest and are for a fixed length of time, which means the payments are the same each month. Provided that you make all the monthly payments for the loan period, the loan will be repaid. Personal loans are just one way to borrow money. Whenever you borrow money, you should carefully plan your budget so you know you can make the payments. If you are thinking about using a personal loan, there are a number of potential benefits and drawbacks you should think about first. The potential benefits of using a personal loan are as follows. Most credit cards will let you borrow up to a maximum of £5,000. However, if you have a good credit rating, a personal loan provider may let you borrow a significantly higher amount of money. Typically, personal loans have lower interest rates than credit cards. Personal loans are a better option if you aren't able to pay off your balance in full each month. Most personal loans offer fixed interest rates and a fixed length of contract. This means that the monthly payments are fixed, which allows you to budget your monthly outgoings accurately, and you'll also know how long you'll be making the payments. You should think about the potential drawbacks. You can normally make overpayments to the lender without charge. However, if these overpayments are significant, the lender may charge you. You are allowed to pay off the personal loan in full, but this is usually subject to a penalty of up to 2 months' interest. It's important to check the terms of the personal loan before you take out the contract to see what your lender will charge you. Advertised personal loan annual percentage rates, or APRs, are representative. This means that the majority of successful applicants get those rates. However, some applicants won't qualify for them. To see if you'll qualify for the advertised rate, you'll need to apply for the loan, and the lender will look at your credit rating. If they don't offer you the advertised rate, they may offer you a higher interest rate or reject your application. Most banks won't offer loans of less than £1,000 or loans for a fixed term of less than a year. You shouldn't borrow more money than you need because you'll be paying more in interest, and you may be borrowing more money than you can afford to repay. If you are thinking about taking out a personal loan, you should ask yourself what you want to use the personal loan for. There are many reasons someone may think about using a personal loan. These are as follows. Consolidating debt. You can use a personal loan to pay off your existing debts and therefore consolidate them into one easy-to-manage loan. This makes sense if you get a lower interest rate than you pay on your existing debt. Before transferring your existing debt, you should always check if there are any exit penalties. Easier budgeting. In most cases, the interest rate and length of the loan will be fixed, so you will know what you are repaying each month. This should make it easier for you to plan your monthly budget. Longer-term payments. Personal loans may be suitable if you are looking to repay the debt over a number of years. Typically, personal loans have payment periods of between 1 and 5 years. Larger expenditure. Personal loans may be suitable if you are looking to purchase larger value items, such as a car or a house extension. The amount you can borrow is higher than a credit card, and payments can be fixed over a longer period. Check the terms of a personal loan carefully before signing the loan contract. Whilst all loans vary, there are some common things to look out for. Interest rates. The only way to tell if you qualify for a personal loan is to apply. If the lender is happy to lend you the money, check the interest rate that they will charge. You may not be offered the interest rate that is advertised. Variable rates. Not all personal loans are offered on a fixed interest rate basis. Some personal loans use variable rates, meaning the payments can go up as well as down. Variable interest rates are more difficult to budget for, as you do not know how much you will be repaying in future months. Fixed interest rates provide you with certainty. Arrangement fee. Some personal loans will have an arrangement fee. These are charged by the lender for setting up the loan. Always check to see if an arrangement fee will be applied, as this will make the loan more expensive. Arrangement fees are included in the APR, which is one of the reasons why you should compare APRs rather than just the interest rate. Exit penalties. There may be a charge to make significant overpayments or full early payment. Always check the charges before taking out a personal loan, making overpayments or full early payment. Better deals. Shop around to find the best personal loan for your circumstances. Use comparison websites to speed up your search, but remember, not all personal loan lenders are on every comparison website. Compare the cost of borrowing by looking at the APRs, and once you have narrowed down your search, compare the terms and conditions of your selected providers. For illustrative purposes, it is not intended to be used for financial planning and does not constitute personal advice. Whilst every effort is made to ensure the accuracy of information contained in the video, it cannot be guaranteed.